This is Mansur FX, and in this video I'm going to be showing you how the markets move in a range. Because when we all started trading, I think you still believe that this pattern is just, in a bullish case, you just believe that this pattern is what is how the market actually move. And when you get to the real market, you start expecting something like this to happen. You understand? But that is not it. And on this video, I'm going to be showing you exactly how it moves in a wave. Because some people will believe that this is, in a bullish case, this is resistance where the market was supposed to turn from downward, but then it broke there, and when it pulled back and retest this level, it creates a new demand where the market will pull to the upside and then get a retracement, then move again to the upside in another or retracement to create your demand zone where you'll be buying from. But that's not it. You wonder why the market always take you out before it moves, or rather it just turn against your position. And I'm going to be teaching you exactly how it moves in this video by showing you the perfect illustration and then showing you the exact movement in the chart. Let's move on. Now, this is just a diagram illustration on how the market moves. If you understand this perfectly, then you start knowing how to handle the market, the candle movement in the real market, even though I'm still going to show you how it actually moves on the chart. So let's go on. Let's assume the market starts from here. Let's see, we have a kind of, let's say, a break of structure like this. Break of structure. This is where how the market moves. It goes up after breaking structure. It creates a pullback. After creating a pullback, you see a kind of move to the upside. In a normal explanation, you'll be expecting this market to turn from this particular place. When the market gets to this level, let me zoom it so you can see it clearly. When the market gets to this level, you start expecting the market to like turn from here. You start looking for a bullish candlestick to just maybe engulfing bar or pin bar, bullish pin bar or harami, all those candlestick pattern. You start looking for them here, and the market will actually give you that pattern you're looking for. And let's set an example. Let's say you take your trade like this. Maybe some people enter aggressively and just put their stop just below the support level where they're expecting the market to move from, and targeting anywhere above here, and the market eventually will stop them out, then continue moving to their direction. Something like this. It always happens. You understand? But I will tell you and I will show you how to know when the market is actually not going to turn from here. Why is the market not turning from your support, and why is it not turning from your resistance? I'm going to be showing you exactly how it works. So when you see something like this, let's delete this. When you see something like this, when the market gets to this level, stop looking for buys. Stop looking for buys. This is SMC, smart money concept. Stop looking for buy from here. You don't look for buy from here. Why? Because this is what we call an inducement. Inducement simply means like it simply means inducing you to do something, like persuading you to do something. This is institutional, taking this trade from here to this level, so that you as a retail trader will be looking out for buy from this level, and that's why it gives you all the candlestick you're looking for around here. And when you get in the trade, it stops you out and then move in your direction. You feel me? But when you see something like this, wait for the market to like take out this, because there are liquidity below here. You feel me? There are liquidity below here. Allow the market to take out this liquidity before you start buying. And you don't just start buying just like that because it has taken this low. No, there will be something like your order block will be sitting below your inducement. This is where your inducement lies. This is it. You see something like this. That is your IDM, your inducement. The market will touch your order block. It will tap into your order block. Then you start looking. That is when you should start looking for that candlestick that you've been looking for around here before it stops you out and then move in your direction. You don't take it here. You wait for it to tap into your order block. Then look for that candlesticks that you're looking for confirmation for your buy confirmation to happen. Then you take your trade. And when you take your trade like this from here, probably you put your stop below the main low. This is where we call this level. This level is where we call the strong low. You feel me? It's called the strong low. I'm going to be explaining it in a further video. I'm going to be explaining it. Then this is where you should target. At least you get 1 to 2.7. That is how you take your trade. You feel me? After a break of structure, after this weak high is being broken, you feel me? After this high has been broken, then you wait for the market to actually create another inducement. Remember, you don't take your trade immediately in that support. That support is always an inducement. So you wait for the market to create this inducement to the upside. Then when it comes back, you see you see your order block here, your valid order block, because it's not just any pullback that you call an order block. I'm going to be explaining on my upcoming videos subsequently. I'm going to be explaining the valid order block, the valid pullback, the valid everything that you need to know about SMC and how to trade like a professional. I'm going to be explaining them in our subsequent videos. So when you see an order block just below your inducement, you feel me? Something like this. This is your inducement. A valid pullback is your inducement. So this is IDM, and this is your break of structure, BOS. So below it, you see another order block, probably. Below it, you see another order block. What would you do in this case? What would you do in this case? When the market is coming, maybe it has taken out your inducement and is coming to one of these other blocks. You don't know, in some situations you won't know which other block is going to work. But the reality, how to know which of these other blocks, these three other blocks, which one is going to work, is when it is only when it taps into your first order block after inducement. Your first order block is called a decisional order block, and this is a trap order block, SMT. And this extreme order block, I'm going to explain. And the only other block that is going to work, it is your decisional order block, decisional OB, or your extreme OB. Those are the only other blocks that are going to work. Extreme OB. This is a trap. They change the color. This is a trap. Whenever you see a case like this, you should know that this order block is 50% probability. This order block, this decisional order block, is always 50% probability. You can take your trade when you see your confirmation, maybe your pin bar, your any other candlestick. Though we have an entry criteria, the lower time frame confirmation, where you can switch into the lower time frame to check your criteria. I'm just giving an instance. Before you start looking for a buy using the candlestick, you can wait for when it taps into this level, your decisional, you can wait for bullish engulfing bar, pin bar, harami, anyone, you can name them. You can wait for them. When they happen, then you can take your trade to the next week high. You feel me? But if it doesn't work, because it's 50-50, if it doesn't work, then you wait for this extreme. This is 80% probability that is going to work. You feel me? But when it taps into this level, don't even take it. Even if it retraces and you see the market moving, 90% of the time it's not going to take this high. Believe me, it's not going to take this high. Even if it moves from here like this, it's not going to take this high. So always don't take it from this trap or other block. Anything in between your decisional and your extreme is always a trap. So you don't trade from there. You wait for your decisional or extreme. That is what works. You feel me? So the market will like go up to this level and maybe to just retrace back to your extreme order block like this. Tapping into your order block, it will start shooting. You'll be surprised how it's going to push aggressively to take out this weak high, and that will be your target if you had taken your trade from this level and putting your stop just below the low and targeting the high, the next week low where the market will be breaking. So this is how the market actually moves. You understand? So that's how the markets move in a wave. You feel me? And that's why your stop loss is always being taken out before it moves. You feel me? So now I'm going to show you a change of character. Let's say in the case of change of character, some people don't actually know how to identify a real change of character. Okay, starting from here, let me elaborate something from this level. You see, whichever point takes out liquidity and breaks structure is considered a strong low in a bullish case. Do you understand? Whichever level takes liquidity, whichever point takes liquidity and breaks structure is considered a strong low. You understand? This is what I mean. You see, I told you liquidity is sitting below here where retail traders, I say retail concept traders, let's say, anticipate this level to be their um, liquidity level. This low is always stop losses are below here. Whichever pullback you see, there are stop losses below it. Whichever swing points you see, especially in between your main structure, is always a liquidity sitting below there in a bullish case. When the market was coming around here, you see something like it want to push to the upside, but eventually it drops to this other block before it continue going up, something like this. So your stop loss will always get hit if you take your trade from this level. Your stop loss is always going to get hit if you take trade from this level. So you have to wait for it to tap into this level and then move to the upside. So this becomes, after this break of structure, you see this move from here to this level, it has taken liquidity, you feel me, and then it pushes up through to the upside and broken this structure to the upside. So this level becomes your strong low. This level becomes your strong low, you feel me. That level becomes your strong low. So when we get to, that is why this place is considered as the extreme order block, you understand. So when the market pushes again, you see this level, this is liquidity sitting below here, this is liquidity sitting below here, liquidity sitting below here. When the market came, cleared all this liquidity, it went up, came again to clear this liquidity that is sitting below here. It cleared it and tapped into your order block and then moved to the upside. So you see, this is the point that moved the price to the upside and broke structure. After taking out this liquidity, it's moved to the upside to break structure. So here becomes your next strong low. This is the point where your strong low lies. This is the next strong low. You feel me? This is now your strong low, where the market is not supposed to take out. The market is not supposed to break here anymore. It's supposed to like this. After creating inducements, let me take out this. After creating inducement, there should be an order block around here, or probably around somewhere here, anywhere just below. The order block has to be below this inducement. This is inducement, don't forget. So the market really needs to come and tap into this level and then move to the upside, breaking this structure. You understand? So here is your strong low. You feel me? But if the market, after breaking this structure, look at, after breaking this structure, you see, it took this liquidity. It went up, giving us this inducement, taking out that inducement, tapping into our other block, and then broke structure. Then this origin has become your strong low. You feel me? This origin has become your strong low. It has become your strong low after breaking this structure and after taking out inducement and then broken that structure. You see, after taking out the inducement and then broke structure, this level has become your strong low. This is where the market is not supposed to. If this market breaks this strong low, where it has taken liquidity and break structure, if the market came down to, like, let's say something like this, and just went and closed below this level, it closed below this level, then that is what we call a change of character. You see people writing CHoCH, CHoCH, which is your CHoCH. I labeled it as CH. This is your change of character. Any strong point that has been broken by a closed candle is a CHoCH, is a change of character. Change of character means that the market wants to change direction. You see, the market was going up, we were bullish, but the market has broken the strong low that was supposed to support the movement, the price movement, to move to the upside. It's supposed to support it from here to move to the upside, but eventually it went up and then it's broken. It's broken through to the downside. So now we are bullish, we are bearish. From bullish, now we're bearish. This is the case scenario. You feel me? Something like this. You're going to have something like this. So let's say the market was bullish and now bearish. When it is bearish, you have your other block, the origin that broke the structure, that created this change of character. You see, this change of character, this is the origin. This is where the move started. This is the main high. So we start looking for strong highs after breaking here. If a point could break a strong low, it means the strength has been transferred from this low to this high. Something like this. The strength at which this low has for taking out this inducement and breaking structure, now this high has the strength now to break this level. It means the strength of this level has been transferred up to this level. You feel me? Like this. So that is your next strong high. When we are uptrend, we look for strong lows. When we are going down, we look for strong highs. You feel me? So now we have our inducements here, because that is a valid pullback. It is a valid pullback now. So we have our inducements. The market has actually moved to the upside. It has moved and taken out this and tapping into our order block, and then it moves through to the downside and breaking this recent low, which is like this. This is our break of structure. So that is our break of structure through to the downside, something like this. Then the market continues like that. That is how the market moves. We continue going, start looking for your inducement and your order block. Same scenario as the bullish market. That is how it happens with the bearish market. So that is how the market moves in a range. So I'm going to be showing you in the charts. I'll look for a clear chart to show you exactly how it moves in candles.